Good morning, good afternoon, and good evening, depending on when you are watching and the time. When you are seeing this video and where you are watching from. Well, if you're a beginner trader or you want to start trading, then this is the right view for you. This page or channel is dedicated to newbie forex traders, and even as an intermediate or a professional trader, you must grab something to go home with. My name is Devol FX by the way. Today we are going to talk about market structure. We are going to talk about market structure in the forex market. Now, what is market structure? If you don't know anything about the market structure, you don't have a strong foundation when it comes to market structure. I really don't think you're gonna make it in trading, because this is one of the important topics in forex trading. Let's go back to the video. Now, what is market structure? In my own definition, market structure is the overall current map of the market's price direction and behavioral pattern. I say that market structure is the overall current map of the market's price direction and behavioral pattern. That's what market structure is. Pick up your pen and paper and write, because you're going to learn a lot from this video. Now, there are kinds of market structure. Now, we have three kinds of market structure. One is the bullish market structure. We have the ranging or consolidation market structure, and we have the bearish market structure, right? Yeah. Now, what is the bullish market structure? The bullish market structure is a market condition whereby the market is creating series of higher highs and higher lows, breaking structures to the upside. Now, what did I say again for people that don't understand or that didn't get it? I said that the bullish market structure is a kind of market structure or condition in the markets whereby price breaking is creating series of higher highs and higher lows, breaking structures to the upside, right? That's it for the bullish market structure. I'm going to show us the diagram later in this video. Now, the ranging market is a market condition. The ranging market is a market condition whereby the market doesn't have any clear direction or bias. It's a market condition. The ranging or consolidation market structure is a market condition or structure whereby the price doesn't have a direct bias. It doesn't have a clear direction. Yeah, that is for the ranging market. Then for the bearish market, as the name implies, bearish, something that is going down. Now, this is a kind of market condition whereby the market is creating series of lower highs and lower lows, right? Creating series of lower highs and lower lows when the market is actually moving down. That's it for the bearish market structure and its kind overall. Now, I'm going to show us the diagrams of market structures. Now, for the bullish market structure, under here, remember I told you that that's when price is creating series of higher highs and higher lows, higher highs, higher lows, higher highs and higher lows, higher highs. As you can see, the market is breaking structures. Note, for there to be a bullish market structure, or for you to call the market a bullish market structure, there must be a break of structures. These things here, these highs that are being taken out, the old highs must be broken. These are called break of structures in the market. BOS. Now, again, if you notice, after the market has broken structure, the market comes down to a 50% level. The market always comes down to mitigate the last low that broke structure. The market comes down to mitigate the last low that took out the previous highs, right? Now, that's how the market moves. Okay, let's go to the ranging market. The ranging market, this is how the ranging market looks like. As you can see, this market doesn't have a clear direction. It's just moving up and down, up and down, up and down. It's not breaking highs. It's not taking out major highs or major lows. It's just consolidating. That's why this is called a range or consolidation. This is called a range or consolidation. Some traders are gonna call this their resistance level and their support level. They're gonna call it their resistance level. Yeah. And this side their support level, because they come with this mindset. That's for support and resistance traders. They come with a mindset that whenever price comes back to this level, it's gonna bounce up. Then when it gets to the resistance, it's gonna bounce down. Yeah, that's it for the consolidation markets. I'm not here to teach you about strategies, but I'm just giving you a glimpse of what you need to know. So for the bearish market structure, the market moves in a series of lower highs and lower lows, lower highs and lower lows, lower highs, lower lows, lower highs, lower lows. Do you see? And it's also forms it breaks structures to the downside also. It breaks structures to the downside. Whenever you see a market taking out a former low, then that's a bearish market structure. When it's not going up, it's a bearish market structure. When it's going up and breaking some highs, when it's going up and taking out previous highs, then it's a bullish market. When it's going up and taking out previous high, it's a bullish market. When it's going down and taking out previous lows, is a bearish market structure. Now this is a diagram for market structures. This is the diagram under the examples and kinds of market structure. This is the bullish, this is the bearish, this is the ranging market or consolidation market structure. As you can see, the way price is flowing. Now this is not the chart representation of market structure. It's gonna be different. It's gonna be different in the charts. So let me show you how it looks in the chart. This is how market actually moves. It's not clean, and also depending on market condition. Now I'm gonna show us market structure in the chart, the bullish market structure in the charts. Now, as we all can see, I'll take this two. This is a low, and this low caused a break of structure. It took out this high. Are you seeing? Then it came back. This is a bullish market structure. Breaks this structure, went down again, took out this structure. Are you guys seeing? Went down again, took out this structure. Now this is how the bullish market moves. I'm gonna mark out break of structure so you can understand. This is a high. This is a previous high. See this low took out this high, causing a break of structure here. This is a break of structure. If you notice what I told you, if you could remember, I told you that price is gonna come back to up to 50% level of the low that took out a high and continue from there.